You weren't supposed to hear this. What I'm about to tell you is the part of the Bitcoin story that never makes it into headlines, never survives the edit, and definitely isn't meant for late night hype threads. Because right now, while everyone is staring at price candles and screaming predictions, something far more important is happening underneath the surface. Something quiet, something strategic. And if you miss it, you won't just miss an opportunity, you'll become liquidity for someone who understands this game better than you ever will. If you want real financial truths they don't teach, hit subscribe and turn on notifications. You don't want to miss what's coming. Not because it's exciting, but because ignorance in this market is expensive, and the bill always comes due when emotions peak. Bitcoin is back in the global spotlight, and that alone should make you uneasy. Volatility is alive again. Leverage is creeping higher. ETFs are being discussed like they're some kind of blessing sent from the financial gods. Social feeds are flooded with confidence, certainty, and the most dangerous word in finance: obvious. Whenever an asset feels obvious, it usually means the trap has already been built. Here's the uncomfortable truth most people don't want to face. Bitcoin doesn't move when you feel ready. It moves when you feel emotional. Fear pushes it down. Greed pulls it up. And in between, the real money positions itself quietly, while retail argues about narratives. This market isn't about charts alone. It's about psychology, control, and who understands how human behavior can be weaponized at scale. Right now, Bitcoin is trading in a historically elevated zone, hovering near levels that matter not because of numbers, but because of belief. These are psychological regions where people stop thinking clearly, where long-term conviction gets confused with short-term euphoria, where late buyers confuse momentum with safety, and that's exactly where wealth transfers tend to happen. On the surface, the story looks clean: ETFs, institutional adoption, digital gold, post-halving supply shock. It all sounds bullish, and that's not an accident. Narratives are engineered when positioning is already underway. By the time the public understands the story, the smart money is already managing risk, not chasing upside. Let's talk about the ETF narrative, because this is where most people get it dangerously wrong. Spot Bitcoin ETFs didn't just make Bitcoin legitimate, they made it controllable. They turned a wild, decentralized asset into a structured product that can absorb, redirect, and release capital with precision. When institutional money flows in, it doesn't rush. It accumulates patiently, often during fear, often during boredom. And when conditions change, it exits through doors retail investors don't even see. ETF inflows feel bullish because they create a constant bid under the market. Dips get bought, panic gets absorbed, price stabilizes just enough to rebuild confidence. But here's the part no one likes to talk about. ETFs also concentrate exits. When macro pressure hits, when liquidity tightens, or when risk-off sentiment appears, those same structures can turn into synchronized selling machines. And when that happens, over-leveraged traders don't get a warning, they get liquidated. This is why watching ETF flows isn't about hype. It's about monitoring institutional mood, because institutions don't believe in Bitcoin the way retail does. They don't believe in narratives, they believe in cycles, correlations, and exit liquidity. Bitcoin is just another instrument to them. Powerful, yes. Revolutionary, maybe. But still a tool. Now zoom out, because Bitcoin doesn't exist in a vacuum. The world is drowning in debt. Governments are running deficits that would have been unthinkable a generation ago. Central banks talk about stability while quietly eroding purchasing power year after year. Even when inflation headlines calm down, real life doesn't. Groceries cost more. Housing feels unreachable. Savings in cash feel like a punishment. This is where Bitcoin's digital gold narrative becomes emotionally irresistible. Fixed supply, no printing, no political discretion, a mathematically enforced scarcity in a world built on endless expansion. For an entire generation that doesn't trust institutions, Bitcoin feels like an escape hatch, and that's exactly why it's so powerful and so dangerous. Because belief is fuel, and when belief becomes widespread, it attracts predators. Post-halving dynamics only intensify this effect. Every halving reduces new supply, fewer coins enter the market, miners feel pressure, weak hands get flushed out, survivors become more disciplined sellers. On paper, this creates a textbook supply squeeze. Demand stays steady or rises, supply tightens, price responds. Historically, this is where explosive moves are born, but history doesn't repeat cleanly. It adapts. And this cycle is different because the players are different. Hash rate remains strong. Network security hasn't blinked. That tells institutional money the system is resilient, but it also tells you something else. The people securing this network are committed, which means they're not desperate sellers, which means when price runs, it can run fast, until it hits a zone where smart money decides distribution makes more sense than accumulation. This is where psychology becomes the real battlefield. There are three groups in this market, and only one consistently wins. Long-term holders who understand volatility as the cost of admission. Traders who think they're smarter than the market and usually learn the hard way. and late FOMO buyers who mistake confirmation for safety. Late buyers don't buy because of data. They buy because of relief. Relief that they're finally in. Relief that they won't miss out. Relief that the pain of watching from the sidelines is over. And that emotional relief is exactly what whales sell into. Fear and greed are not opposites. They're partners. Fear of missing out drives people to buy high. Fear of loss forces them to sell low. And the media amplifies both. Bullish headlines at tops, bearish panic at bottoms. Not because it's malicious, but because attention is the real currency. Options markets and funding rates quietly reveal what headlines never will. Crowded longs, aggressive leverage, confidence stacked on confidence. That's when traps are set, not because Bitcoin is weak, but because humans are predictable. This is the part that feels illegal to know. Bitcoin doesn't punish ignorance, it exploits it. When positioning gets heavy, when everyone is leaning the same way, the market doesn't need bad news, it just needs an excuse. A macro wobble, a regulatory whisper, a sudden liquidity pull, and when that candle prints red, it cascades, stops trigger, liquidations fire, panic spreads, and coins move from emotional hands to disciplined ones. That's the silent wealth transfer no one talks about. Yes, the long-term thesis remains intact. Fixed supply, growing infrastructure, institutional access, global liquidity, all real, all powerful. But that doesn't mean the path is smooth. It means the path is engineered to test conviction. If you treat Bitcoin like a lottery ticket, this environment is a minefield. If you treat it like a multi-year strategic asset, volatility becomes your ally. The difference isn't intelligence, it's discipline. This is where most people get uncomfortable because the truth removes excuses. You have to decide who you are in this market before the next move happens. Not during, before, because Bitcoin doesn't reward comfort, it rewards preparation. Here's the twist no one wants to admit. This can be a generational opportunity and a brutal trap at the same time. The opportunity belongs to those who think in years, manage risk, and understand cycles. The trap is waiting for those who chase green candles, borrow conviction from social media, and confuse momentum with safety. Right now, Bitcoin sits at the intersection of hope and danger. Strong fundamentals surrounded by emotional excess. Institutional strength wrapped in retail greed, a perfect environment for both massive upside and violent shakeouts. The warning is simple, but not easy. If you don't have a plan, you are the plan. If you don't understand why you're buying, someone else understands why they're selling to you. Bitcoin is still writing history, but history isn't written by crowds. It's written by those who move before the crowd understands what's happening. Most people will never understand this, and that's not an insult, it's just reality. The real question isn't where Bitcoin goes next. The real question is who you become when it moves. Because the market doesn't care about your beliefs. It only cares about your behavior. That's the part they never teach you. If this changed how you see money, comment below and tell me which side of this cycle you think we're really in. Send this to someone who needs to hear it before the next move. And if you want to stay ahead of narratives instead of trapped inside them, subscribe and turn on notifications. Because once you see how this game is played, you can't unsee it.